GM friends, thanks for tuning in to DeFi-Logic's TA Tuesday live in our Discord server at 10 a.m. Mountain Time every single week. You can get 10% back if you sign up for Blowfin and join our Smart Chain poker game this Sunday. Details for both are in our server. Join Discord to learn more. In today's community call, we will review charts for Bitcoin, Ethereum, and for legacy markets, S&P 500, Dow Jones, NASDAQ, US 10-year bonds, DXY, and silver. With that, over to John.
Thanks, Pepe. Okay, we're going to start out today with Bitcoin, and even with crypto, I still use just a daily chart. I use smaller time frames as well, but I still use daily chart as the king of my charts. So I've had a triangle formation that's back all the way to May 21st. Not that far, but May 21st. And Bitcoin formed this triangle formation. So the bottom horizontal line, or the support line, was at 67,600. And it just kept coming down off of these extremes, which was an extreme right here between the 2x band and the 3x band. So of course it was going to come back down. And then if over the weekend, it really went to the point of this triangle. And then yesterday it popped, actually went pretty high yesterday. And then today we're popping again. So triangles, I talk about it a lot in TA charts in the Discord. So triangles is about price compression. You can see how the price compression just kept getting smaller. And then because Bitcoin is basically a mature market as well as ETH in the crypto world, that the price compression just gets to a point and then it pops or drops. And this one actually, it popped, which I would assume it did. So we're trading right now at 70,585 and change, actually going higher. So I expect this to get to a certain point, probably up to the 2x band right here, and then it could start to flatten out or trade down a little bit. Moving on to ETH, we're going to get to ETH here, which is a very sideways chart. I don't know what to do with ETH because everybody's waiting for the ETF to come in. So it's been trading in this range. You can see it still hasn't reached the 4,000 level, which it was going to. I tried to back on May 27th, and it's just flattened out since then. So I've also been posting in the TA charts is that the longer it takes for ETH to get approved on the ETF by the SEC, I don't think it's going to be that much of a pop. I think the momentum and enthusiasm is dying out, and everybody's going to go, oh, I got ETF got approved. I believe it will pop, but I don't think it's going to pop as much as Bitcoin did with its ETF announcement. By the way, the Bitcoin ETF is the largest ETF in the world right now. It basically took that ranking within a 6-month period, which is pretty phenomenal. And there's a lot of people piling into it, as well as pension funds. And I saw that Canadian Teachers Fund was getting into it last month. So anyway, moving on to S&P 500. This is the SPX chart, and you can see that we keep floating around 5,300. It hit an all-time high right here on the 23rd, which was a Thursday, but it didn't stay there for long. It dropped pretty quick, and then it's gone up. It's hanging around that 5,300 level, coming down to the 5,250 level, which is around the standard deviation line. This black line here is the standard deviation line. So it is trying to figure itself out. And part of the theme today is, does mixed economic news and numbers indicate a soft landing? Not necessarily. It's the reason why the chart here in S&P 500 is moving all over the place and going sideways as well. Is just there's no clear indication whether we have good economic news each week, or actually we're getting to the point of each day. And it doesn't mean necessarily it's going to be a soft landing. We still are in the conundrum of whether the Fed's going to cut this year or not. The traders want the Fed to cut this year, because that means basically that we are going to have a soft landing. So by raising rates and then cutting rates and getting a couple of cuts into the time frame, then everybody's, we had a soft landing, we're good. And everybody wants a soft landing. The president does, the traders do, the economists do, everybody wants that. Whether we get it or not, it's always a delayed, looking in the back of the rearview mirror, and it's a delayed action. So we really don't know until we're into the soft landing. Now, the Dow Jones, we saw news way back that it hit 40,000. So the 40,000 level is the headlines and things of that nature that we had back in May 20th and May 17th, but it's dropped back down now, and it's had quite a fallback. And so now we're went down to the bottom, the lower standard deviation line, which is this 2x line right here, popped back up, and now it's moving sideways as well. So after a great run up, and then it's fallen back down. So we're at 38,500 and change, which is a pretty big drop. And we filled in this gap. I talked about in Legacy Markets how we fill in gaps, and it filled in that gap right there. So that got filled in, and now we're figuring out going sideways. Moving on to the dollar index. Okay, dollar index has been moving around quite a bit. It has reached the standard deviation line right here. It attempted it right here back on May 23rd, and then it dropped and tried it again. And it actually is a higher point than its first attempt, but we've also dropped back down. So what I'm looking at here is this low is a lower low than the recent low back here on May 16th. So we've had that low. It's below the 104.15, which I've had that level for a long time. And it's just floating in this area right here down at the lower 2x band. So I'm thinking that crypto is going to have a bump up because the dollar index is trading so low. As you have that reverse correlation, these things right here is giving some hope for crypto at the moment. So I'm going to move now to the US 10-year bond. And we're going to be looking at the yield is basically the percentage of what the bond is going to yield to the bond holder. So right now, we're at basically a double bottom point. We have a bottom right here, which is a recent low, and then we're getting below that right now today. So that's good news in a way that the markets will start to go up because this is an inverse correlation between the markets and the bond. So with the bond going down, it means the market should be able to go up or get some momentum going up. But right now we're forming a double bottom here, it looks like. So it's too early to tell, because if it is a true double bottom, then it'll start to climb back up again. But it's too early to tell on that. But it's below the critical 4.5% yield. So right now everybody's got a little bit of hope. Last but not least, we're going to go to silver. Now silver is like gold. It recently popped, as you can see. Gold popped in March and April, and then it's fallen back. Now silver is basically falling back again. So if you look, after the run up, we've had a dip, which went back down to about $30, and it formed a double top right here. So now we're looking at, okay, is it going to go below this midpoint line? And this is like either a double top, or some people call it the M formation because it looks like a capital M. All right, so this is the midpoint of the M, and today we traded below it. So now we're looking at silver starting to fall. So now it's going to get down to this 28.90 level, $28.90. And at that point, will it bounce back up, or is it going to go back down? That's the question. But it did break this midpoint level right there. So that is pretty much a negative sign. It's not looking good. It probably will get back down to 28 bucks on the silver. So let's look at gold. We'll throw in gold at the very end here. Gold is always the headlines and the rich cousin compared to silver. So let's see if this chart will come up here real quick. So gold basically had a huge run up all the way back here in March and April, got to this point, didn't make 2,400, and then dropped back down, and then it rallied back up to the 2,400 point line, went to a high of 24.26, which is the all-time high for gold. Then it's come back down, and now it's trading sideways. So the sideways action right here recently is higher than this sideways action that we've had back in the end of April and into the first part of May. So it might tag it and then bump back up, but or it's just going to go sideways. So right now there's no motivation for gold to go up. There's no war going on right now in Israel. There still is, but everybody's talking about ceasefire. The Ukraine-Russian war is like on the back burner right now. So at the moment, gold is just hanging in there, staying above 23, trading sideways. The chart's very sideways. You see these two upper bands are sideways. Standard deviation line is sideways, and the lower two bands are sideways as well. So gold looking very sideways. You can tell after the run up at the end of April, it's just popped back up, but the lines have been pretty much sideways right across the board. And the blue lines here, which indicate the bands. So anyway, that is it for today with Tuesday, and I'll hand it back over to Pepe.
That is it for this week. Short and sweet TA Tuesday. If you're watching on YouTube and you enjoy our content, please give us a thumbs up and hit the subscribe button for more crypto, trading, and overall market content. Thanks for joining. If you're in the server, I see a couple of you guys in here, and we'll see you next week at 10 a.m. Mountain Time or for the recording on YouTube. And don't forget, we take requests if you're in the server. GM friends.
Join us next week in Discord for TA Tuesday at DeFi-Logic.com.